Sarah, a tutor here at Accountancy Learning, and in this video I'll take you through the AAT Level 3 Financial Accounts Sample Paper 2, Task 3. So Task 3 is about producing, adjusting, checking and extending the trial balance. First part of the question provides us some statements and we need to identify whether they are true or false. So the first one says an extended trial balance for a partnership will have extra columns for the appropriation account. So this is false because the appropriation account will be done after we've found out what our profit or loss is, which is done via the extended TB. So the appropriation account does not form part of the extended trial balance. Interest on drawings may appear on a partnership extended trial balance, but will not appear on a sole trader trial balance. So this is true because within a partnership agreement, there will be some agreement over what kind of interest will be charged on drawings. But with a sole trader, it's only their own money that's being affected, so that doesn't apply. A partner's salary will appear as a debit in the statement of profit or loss columns of the extended trial balance and a credit in the statement of financial position columns of the extended trial balance. So this is true. So the salary is going to be an expense to the business, so it will show as a debit in the P&L. But the credit side of it is the liability. So the salary is then going to be a liability of the business to pay to that partner. A capital account may appear on a sole trader extended trial balance, but will not appear on a partnership trial balance. So just be careful here. Remember to read the question carefully. It says will not appear on a partnership trial balance. So this is false because both sole traders and partnerships will have to show the capital account. So how is the business invested? Next then, Jacob runs JS Supplies, which is not VAT registered. State the overall effect on the elements on the accounting equation for each of these transactions. These little drop-down boxes here will either will ask you to choose from increase, decrease, or no effect. So JS Supplies obtain a loan from the bank. So what's going to be happening with the loan? So the loan is going to be a liability. So we're going to have an extra liability there. And the money is going to go into the bank account. So our double entry there is going to be to debit the bank and credit the loan account. So the bank then, so assets is a bank. So that's going to increase because the money is going to go into the bank. So assets will increase. The liability is a new loan being taken out that's going to have to be paid back. So that's a liability to the business. So that's also going to increase. But this won't have any effect on the capital. JS Suppliers makes purchases on credit. So purchases then, we will have our debit into the purchases account, which is our expense account, and the credit into the payables ledger control account, which is our liability account. So we're not touching assets here at all. So there's going to be no effect on assets. We've got liabilities increasing here because we are we're buying things on credit. So we're going to have to pay our suppliers at some point. And then capital. So does this affect our capital? And the answer is it's going to decrease our capital because the purchases are going to affect our profit figure. So the purchase, these expenses here will reduce our profit. So therefore it's going to reduce capital. Next, you are reconciling the balance on the payables ledger control account to the sum of the balances on the individual accounts within the payables ledger. The payables ledger control account has a balance of 27,446, and the sum of the balance on the individual payables accounts is 27,214. Following an investigation, a number of errors have been discovered. So we need to identify the entries which need to be made in the relevant accounts to correct any errors that have caused the difference between the two balances. We're told that each error should have at least one entry next to it, and if there's no overall effect, then select the no effect in the last column. So we know for each of these we need to do something in each row. So starting then with that first one there, an invoice from John Green for £140.70, including VAT, has been posted to Jan Grun's account in the payables ledger. So the transaction has gone through on the individual accounts, but it's been put on the wrong individual account. So that means that there's going to be no effect because there's no imbalance. So the posting's gone through, but it's gone through on the wrong account. But the difference is not going to be between the payables ledger and the payables ledger control account. A credit note for a discount received of £12, including VAT, has been entered into the individual's payables account, but has been left off the payables ledger control account. So the credit note has reduced the amount that's on the payables ledger, but it hasn't gone through on the payables ledger control account. So we now need to put that through. So check which ones we're looking at. We've got payables ledger control account here, individuals payable account here. So we're going to want to do it in our payables ledger control account. And as it's a credit note, it will reduce our liability to the supplier. So if we're reducing our liability, the £12 will be in there. An invoice for £60 including VAT has been posted to the wrong side of J Smith's account in the payables ledger. So if you look, we'll have J Smith here and an invoice. So that would increase our liability. So it should be a credit, has been posted on the wrong side. So it's actually sitting on the debit. So what do we need to do to correct this error? Is first of all, we need to put a £60 credit in, which then cancels each other out, and then do another £60, which gives us a total credit adjustment of 120. So be careful when you have got that it's been posted to the wrong side, just putting 60 in is only going to cancel it out. So you then need to double it to then put in the correct entry as well. So this was working in the payables ledger. So it will be £120 credit. Then the total column in the purchases daybook has been overcast by 100. So importantly, we're looking at the totals column. So that is going to be the gross amount. And that gets posted to the payables ledger control account. If it's been overcast, it means there's been too much. So the total column would have been credited into the payables ledger control account because it would have been the liability, but it's been credited by £100 too much. So to correct that error, we're going to debit it by £100 in the payables ledger control account. When you are tackling these questions, double check, you know, which account you're working in, which account has the error, and then think about how you would then adjust for it. So what has happened and what needs to happen. Moving on. The ledger columns of the extended trial balance have been produced for the year ending the 31st of March 20X8. The debit columns totals 2,673,865 and the credit column 2,674,365. A suspense account was set up. Correct the following errors by entering adjustments into the extended trial balance. So let's have a look at each one in turn. So a bank payment for rent for 4,800 has been reversed in the ledgers. So just like we were talking about being posted on the wrong side, this is what this means. It's been reversed. It's been posted on the wrong side. So what has happened? So let's draw out a little mini T account here. So what has happened is we've got bank and we've got rent. So because it's been reversed, the bank payment should have been a credit, but it's been reversed. So it's 4,800 debit is what has happened. And in the rent account, it's 4,800 credit. So we need to correct it. So our first port of call is to do 4,800 bank credit, which cancels those two out. And then 4,800 again, for a total of 9,600. So that second entry there will then put it into the right place. And we need to do the same on the rent account, cancel out the wrong entry, and then put in the correct entry so that it's sitting on the right side of the account. So on that debit side, it's an increase in expense, so it should be a debit. So our actual adjustment is doubled to 9,600. So bank then, we've got our bank line here. So our adjustment in the bank was on the credit side of 9,600. And we're also then going to put it in rent of the debit of 9,600. Next, the total column in the sales day book has been overcast by 1,000. So this time, we've got the total column in the sales day book. So this is the gross amount into the receivables ledger control account. So that's where that column in the sales day book goes. It's been overcast by 1,000 and it's only the total column that has been affected. So what would have happened is we would have debited the receivables ledger control account with an extra £1,000. So to correct this, the first thing that we need to do is our trade receivables, our receivables ledger control. We will credit 1,000 to take that overcast out. We put in too much, so we're going to take it out. And then this is a one-sided entry. So what we then need to do is put the opposite side into the suspense account here. Next, Max took 1,500 out of the bank as drawings. This was recorded in the cash book, but not in the drawings account. So it's already been put into the cash book. So what we need to do is make sure that we now put that in the bank so that the double entry is done. But again, we are going to have a one-sided entry here. So we're going to be using the suspense account as well. So we need to put it into drawings. So that is going to be our debit because the money out of the bank was our credit. So drawings, our adjustment is 1,500 debit. And our opposite side to that needs to go into the suspense account because it's a one-sided entry. Now we can already see, if we look, we've got a 500 balance there on the debit side. And that's now being offset and cleared completely by these two entries here. Then finally, no entry has yet been made with regards to closing inventory of 8,428. So when it comes to closing inventory, that needs to show on our statement of financial position as an asset. So that's going to be our closing inventory. So our asset is on the statement of financial position. So that's our debit there. And it forms part of the cost of sales in our statement of profit or loss. So that's our credit. So each one you can see you've got equal and opposite entries. And then in the exam, these two here will auto sum and you'll see that you balance. You've now been asked to complete the trial balance as at the 31st of March 20X9, an extract of which is shown below. Then we're given the following information. Accrued income for the year has been recorded as £1,000. The allowance for doubtful debts figure has increased by £100 as at the 31st of March 20X9, it stands at 1,800. Due to a large purchase of non-current asset last month, we are now owed £540 in respect of VAT. During the year, there's been a disposal of a non-current asset which resulted in a gain of £250. We've also given prompt payment discounts of 1,820 during the year. So we now need to complete the extract of the trial balance. So accrued income for the year then. So we need to put this into our trial balance. So our accrued income is 1,000. So if we're accruing income, it means that we've made the income in that year. So our income is increasing. So we will have £1,000 in our credit side of accrued income. Allowance for doubtful debts. We're told the allowance for doubtful debts figure has increased by 100, but we're given the balance as at the year end date. So here you can see the balance is the 31st of March 20X9, and we're told at that date it stands at 1,800. So it's going to be a liability to the business of 1,800. VAT, we're told that due to a large purchase of non-current asset last month, we're now owed £540 in respect of that. So if HMRC owe us, then we will have a debit balance on our VAT control account. So this 540 will show on the TB as a debit balance. The discount allowed. So for discounts allowed, we're told that prompt payment discounts of 1,820, and this is going to be an expense to the business because we've given those discounts to customers. So that's going to be a debit on the trial balance. The gain on the disposal of the non-current asset. We're told that there was a gain of 250. So if we're making a gain, it means that we've made a profit when we've sold that asset. So that is a form of income. So £250 on the credit side, it's increasing our income. And then finally, we need to look at the increase in allowance of doubtful debts. And we're told the allowance for doubtful debts figure has increased by £100. So if we're increasing that figure, it means it's an extra expense to the business because we don't expect that percentage to be paid. So therefore, it's going to be £100 on the debit side of the TB. So as you approach these types of questions, make sure that you break it down into each individual one, work out what type of account and where that would sit on the TB. That's the end of task 3.